90% of the people who ever enter into the stock market with a lump sum amount, with a happy face, and with an excitement are getting kicked out from the markets forcefully with huge losses. Do you know why? If you know why, please put your comments so that we all aware of your own experiences. In this video, I'm going to discuss about such 6 basic, very fundamental psychological steps to sustain in the market for a longer period of time with a huge profits. I'm not going to discuss anything specific about a fundamental analysis or a technical analysis. This is purely a human psychological basis video for a beginners and for the investors who are investing for such a longer period of time, so they are encountering with a huge losses in the market right now. So this video is for you, for the beginners and the people who are losing money in the stock market. This is purely on the basis of my experience. I always think that I should have known these 6 important steps at the time when I enter into the stock market, so that I could have saved and gained lots, meaning thousands of rupees. Take any big player in India, either it could be a Rakesh Junjunwala, Rakesh Damani, Dali Khanna, Vijay Kedia. These are the 6 basic steps which they have followed initially until today. If you go through the books which they have published, if you go through their experiences, if you go through their interviews and understand their psychology, these are the very basic, fundamental, to very, 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 very crucial and important for all the stock market beginners and the people who ever are losing money in the stock market. Step number 1, which is called as a commitment. 2, consistency. 3, competency. 4, keeping the stop loss all the time. Whenever you're doing a trade, make sure you keep the stop loss. 5, don't invest lump sum amount in any single stock. Though you are very confident about that stock, though the company was giving a huge returns or huge dividends, if you have an amount of 1 lakh rupees, don't blindly invest the whole 1 lakh rupee in the same specific stock. And the last, don't depend on experts' analysis. Make sure you do your own analysis when you enter into any stock. Either it could be a small cap or a mid cap or a large cap. Don't go behind experts' opinion, whoever is coming on TVs and saying this is great company, this one is having a huge returns in future. Don't trust them. Even don't trust me as well. Please make sure you do your right analysis. You do understand the company. You try to understand the technical concept. You try to understand the fundamental concept. If you are a fundamental investor, if you are a trader, then make sure you write all the technical patterns, which includes the candlesticks, psychology, the volume, and make sure you are investing in that right stock at right point. At least I always say to my friends that if you listen someone, whoever as an expert saying that this is a good stock, and then you go and invest money in that specific stock, if that stock go into the low, then if you lose money, once you lose money, then you don't get anything. At least you lose your money and you don't get any knowledge or experience from that. If you invest in a stock where you could have done some research, and even if you lost the money, then you could have some experience. With that experience, you could gain some hundreds, thousands of rupees in a different stock. It's because like you already had an experience why this stock was failed, why this one was failed. With the same experience, you could gain more profits in a different stock by having a good lesson with your previous experience. So these 6 are the very basic fundamental steps which you need to follow. The first one is the commitment. The commitment is something which we need to have in the stock market as well as in our lives. This is a fundamental psychology. You need to be committed. What exactly that you are doing? You need to be committed to the stock market. You need to be committed that you need to find a stock which is going to give you a huge returns. You need to be committed that you are going to have a well balanced mindset at the time when you are in the market. You need to be committed yourself that you need to work hard, you need to understand the patterns, you need to understand the business, you need to understand the company, and then you need to understand the people's psychology about that specific stock. This is called a commitment. All the big players, they have a very good commitment. That's the reason now they are in billions and millions. And the second one is consistency. Stock market is not a rocket science. We all know. Whoever enter into the stock market, for sure they will lose money. There is no doubt about that. Now, you can take any names, any big player. Initially, we all lose money. But the fact is how much we are learning with those bad experiences. How we are getting recovered with those bad losses. How much consistent are we in the stock market once after we get a huge losses? It's because like if you don't have a consistency, if you don't do it consistently, don't read the charts, don't understand the fundamentals, don't be in the stock market consistently, you are permanently kicked out from the market once after you lose all your money. So you need to be very consistent on each and every day, though you are investing in the stock market or not, though you have a money in hand or not. You need to be very consistent to analyze and understand the markets on a daily basis. You need to follow the markets, where the nifty is going, where the bank nifty is going, why the nifty is going in a reverse trend, why this stock, whatever the stock which you name, is going to be a breakout. So you need to be consistent and understand the concepts of the stock market, so that at least the next time, by the time when you have a money, even after once you had a huge loss, by the time when you have a money and going to invest further, if you are consistent, for sure, trust me, you are going to get a huge profits. If you are not a consistent, I'm sure that you never be back into the stock market, and you never get good profits into the market. And the third most important is competency. Competency, which is more about knowing the market, understanding the market, reading the psychology of the investors, you know understanding the global scenarios, what's happening at the global level, what's happening at the Indian level, what is the growth pattern in India. For example, if you want to invest in any company, take it as a TCS, Tata Consultancy Services, you need to understand how the company is performing. We don't know what exactly is happening or cooking inside the company, but at least we could able to see the charts, patterns, and the data which is released from the TCS and understand what exactly is happening. Whether the stock, whether the company is going to be grow in future or not, right? We're able to understand those basic, fundamentals and basic technical technology. I mean, basic technical, chart patterns, by having on the screen. So this is very important. Competency is nothing but keep on following up and understanding and reading the stock market, understanding the Indian growth factors, understanding the global, what's happening at the global level, what's happening at the Indian level, what are the new RBI rules or what are the new SEBI rules which are going to be implemented in future, and what are the impact which is going to be with those new rules. So this is called a competency. And the fourth is keeping the stop loss. Make sure you keep the stop loss at all the time. whenever you do a trade. Stop loss is nothing but having a helmet while we are riding a bike, having a seat belt while we are going in a car. If you don't have a helmet or if you don't have a seat belt, imagine if something happened, we don't know what's happening and what's going to be happening in future. You may be a safe driver, but you don't know about the other one. So they may come and hit you. If you don't have a seat belt or if you don't have a helmet, you're gone. Once that's happened, then you're gone. You are no more in this universe. It's the same in the stock market. If you don't keep the stop loss, you did a very lots of homework on that specific stock and you are following that stock from a longer period of time, and they have given you a huge uh, uh, big returns, and they're paying a high dividends, and you have a 2000% confident on the stock that the stock is going to hit the moon. So make sure you keep the stop loss. Because like you don't know what's going to be happen. The stock market is not only depends on that specific company. There are so many things which depends if the stock needs to go to if the stock needs to go and hit a huge price. There are global level changes. There are many policies and rules. There are so many things which you need to consider. Those are all not in your control, right? You just going the stock, but you don't know anything beyond that. Make sure you keep the stop loss at all the time so that it will save you lots of money when the stock turns into your opposite. And the final and the sixth point is, don't listen to anyone who whoever the experts which are sharing the knowledge on some stocks. They keep on coming on TVs and they keep on coming on popular channels, and they say that this stock is having a huge potential which is going to hit moon in 1 month or 2 months of time. This stock they have some insider news that this company is going to get a big you know client from America or from UK. Don't listen all those nonsense even though they say to you on TVs. Please make sure you understand the concept and homework do your homework. Try to understand why that stock is going to give you the results, why you need to invest in that money, why you need to invest money in that specific stock, what happens if something wrong, right? So make sure you do your own analysis, you do your own research before investing your hard earned money in any of the stock, either it's a diamond or either it's a gold. Don't trust anyone in the market. No one knows anything 100% what's happening exactly inside the companies. Those are all assumptions. You know, we are just assuming that the stock go up. We are just assuming by looking into the charts, by understanding the growth factory of that specific organization and thinking that this stock may go into the sky. That is purely an assumption. That is not real. There is a lots of difference between real and assumption, right? So we're all assuming that the stock may go and hit a new level so that we will become a millionaires or a billionaires. Don't do that. Please make sure you do your homework, you do your own research before investing your hard-earned money in any of the stock. I'm just reiterating all the 6 points which I have written here. The first thing is commitment. And the next one, consistency, competency, keeping stop loss. Don't invest all of your money in one specific stock. Don't listen experts. Own homework. Thank you very much for watching. Please make sure you subscribe, like, if you like this concept, and please put your comments if you feel that anything which I say in this video is not exactly that what you are referring to. Have a happy, healthy, wealthy and successful life.